So 19 points on the Nifty. Reliance third quarter numbers today, it will be really the big one to watch out for from the earnings stable. And our entire team is joining in right now to take you through each of the businesses. So we'll give you an overall top-down perspective in terms of what to expect. We'll focus on oil and gas, we'll focus on telecom, and then, of course, the retail businesses. Each of them, I mean, the size of, many individual companies combined in those particular sectors. So let's kick it off straight away. Anisha, top down, what are we expecting?
Well, overall for the company, we're expecting that the refining business of the company will remain sluggish, but the consumer-facing business, which is the telecom as well as retail vertical, will continue the strong momentum. Now, on the numbers front, on a consolidated basis, we are looking at a revenue decline of around 3.5% on the top line, and that is because the price realization in the refinery business has been tepid. EBITDA is expected to remain steady, but the profit is expected to jump up by 2% sequentially because that will be supported by higher other income as well as the lower taxes. Now, to talk about the various segments then, first up on the refining bit, well, the GRMs are expected to decline by around $1 per barrel and come in at 15-quarter low of around $8.5 per barrel. That is because we have seen the decline of around 30% in the Singapore GRMs as well. And overall, the throughput is also expected to be just very steady. Moving on to the petchem business, wherein remember, the polymer business has been coming under a bit of pressure, but it is the polyester margins as well as the PX business which is really doing well, and that is what is expected to propel the margins higher for the petchem business. As far as the Reliance Jio is concerned, well, the momentum has been strong in terms of the subscriber addition. That has been happening at the rate of around 10 million subscribers per month. That is expected to continue, though the ARPUs might decline and come in at a level of 127 to 130 per unit. Other than that, as far as Reliance Retail is concerned, well, it has been growing at a scorching pace of over 100% in the last 3-4 quarters. Now, that is expected to continue, and the number is expected to double this quarter as well, and the EBITDA margins are expected to expand. Overall, the stock has already run up around 15% in the last 6 months, but the street is still a tad bit worried about the capex number in the balance sheet. So we'll watch out for those comments, but let's do one thing. Let's break down this entire company into the various segments. First up to Sonal, who will tell us how the oil and gas business, refinery as well as the petchem business might do this quarter. Sonal, over to you.
Thanks a lot for that, Anisha. And as you rightly pointed out, refining business is expected to be sluggish this time around because this benchmark Singapore GRM, they are down around 30% sequentially and 43% on a year-on-year basis, and that is because of weakness in gasoline and naphtha and LPG cracks. So that is something that will put pressure on the GRMs overall. Now remember, refining for Reliance means 40% addition to the FY20 earnings growth, and also refining counts for a third of Reliance's quarterly EBITDA numbers. So that is why refining is an important number that we'll be watching out for. But overall, the number will be very sluggish, and Morgan Stanley and Goldman Sachs, they say that FY19, or rather the calendar year 19, will be the year for refining because they expect improved gasoline cracks and also improvement due to the IMO regulations. Now let's move on to the petchem business. Last quarter, that was good because of higher production from expanded capacities. This time around, we are expecting a 2% sequential increase in the EBIT of the petchem business. Now remember, that compares with the 3.3% EBIT growth that we saw last quarter and 22% that we saw in Q1 of FY19. So we are expecting the growth to slow down a bit, but still what will actually aid to this growth is the polyester chain margins that will offset any weakness that we'll be seeing in the plastic segment of this particular petchem business. Profitability of naphtha-based petchem is also expected to improve, and the ethane business, the prices had been going up, but now they have come down considerably. So that is something that we'll be watching out for. So in a crux, if I tell you, petchem is expected to be steady, but refining, that will continue to remain sluggish. Now let's move on to the retail business. Mala, over to you.
Well, for the retail business, this is a retail behemoth which is growing upwards of 100% over the last 4 quarters. And that scorching pace, like Anisha said, is likely to continue. So if you take a look at Nomura's expectations, they expect Reliance's retail arm to clock in a revenue of 37,000 crores this quarter. And why is this important? Because just for perspective, 2 years ago, their annual retail revenues in FY17 were close to around 32,000 crores. Not only is it growing in terms of the top line, the EBIT is likely to triple. So 1,500 crore thereabouts. This compares to just about 490 crores. From a valuation perspective, the retail business is fairly important, while because it does not contribute as much to the top line as well as the bottom line of the company, the street ascribes a valuation of anywhere between 1.5 lakh to 2 lakh crore in terms of overall valuation for Reliance. So 25% of Reliance's value comes in from the retail business out there. Near doubling of the revenue and trebling of the EBIT is expected. But all eyes, rather all ears, will be on the Jio vertical as well, for which we have our telecom expert Reema.
Well, expect the momentum for the Jio business to continue. So we're working with a sequential improvement of 12.5% in the company's revenues, aided by strong subscriber addition. So in the month of October, we saw more than 10 million subscribers got added, and that seems to be the run rate. So for the full quarter, we're working with a net subscriber addition of 30 million, which would be lower compared to what we saw in the prior quarter. Margin expansion should be there, so we're working with EBITDA margins of 39%, and that will drive more than a 15% increase in the company's profitability. However, the average revenue per user would continue to come down. It used to be more than 150 plus a couple of quarters ago, and this quarter it could come down to 130. The key to track from the management commentary from the statement will be the Jio phone traction, any update on the Jio postpaid plans and the kind of traction it has seen, and also on the FTTH rollout. Also, balance sheet improvement will be tracked closely. They had announced plans to hive off their tower and fiber into separate entity with the eventual plan to monetize it.
Okay, all right. Thanks very much, Reema, Anisha, Manglam, as well as Sonal joining in for a complete 360-degree view on the preview for Reliance Industries, which comes out this evening. And I think, Prashant, the most watched out for me will definitely be the entire retail business, especially after CLSA's report that came out earlier in the week, where they mentioned that it's around a $137 billion opportunity by 2028. So that'll be really something to watch out for. But standard disclaimer that Reliance Industries owns Network 18 and TV 18, the companies which operate cnbc TV 18, the channel you are watching. Reliance also owns Jio. Well, there is some amount of traction coming in the banks at this point. Though the bank Nifty is in the red, you have select stocks such as Axis Bank, which is managing to hold its head above the water. We have Kotak Mahindra Bank, which is up around 0.7% as well. So not doing too badly at this point in time. But overall, very quiet session for us. Nifty is just about holding at around 10,900. Mid-caps also absolutely flat. Bank Nifty is given up gains from the top. Well, it's a wrap on the show on Trading Hours. Stay tuned. Halftime report just after a short break.